Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is our good friend, James Anderson from SD Bullion. James, it's great to see you again.
Good to see you guys. Very
Yeah, it's
happy to be here. Awesome.
absolute pleasure. So, James, silver has dropped below $19 an ounce, or yeah, it's actually $18. Gold is near $1,700 an ounce. And at SD Bullion, are you seeing people buying the dip? Is the demand picking up?
Yeah, I mean, this week we saw silver spot price drop roughly about $1 an ounce, and whenever that happens, it's just a short-term basis. You have a lot of value buyers who come flooding in and buying bullion and buying the dip. So our volumes of sales have been near record pace this week in both gold and silver with the dip. So my expectation, I'll talk about it this week during our SD Bullion market update that we do on YouTube every week. I'll publish it on Friday late in the day, but I've already recorded it and everything, and it basically goes through, the technicals about where we could go. We could still go further down, but I argue in the video that if you're waiting on the sidelines hoping to catch a knife, people who did that in the global financial crisis in 2008, if they waited too long, there was no bullion to be had. And any bullion that you could find was 2-3 months, delayed and at premiums that were exorbitant, worse than they are at the moment. So my suggestion is, buy the dip right now. That would probably be smart, and maybe keep a little bit in case and be quick. You have to get ahead of people, because if the spot prices fall even further in the coming weeks or months, there's going to be little to no bullion to be had.
Michael has this great Twitter account where he tracks this type of data. And this one's back from August the 16th. A couple of weeks ago was the most recent time he updated this particular graph. But it's still relevant because it's continued along the same trend. What he's measuring here is the 50-day and 100-day average rates of withdrawal, as in how quickly is it coming off the exchange. And, going back, a decade, we've never seen the average withdrawals per day so high. We sort of knew this was happening, but Michael really put it in a graph form that really helps you understand something unusual is going on here.
Yeah, the rate of change is unprecedented, and that kind of jives with some of the data I've been looking at in the East, mainly in China. This past week, I saw data of Chinese gold imports are at levels not seen since 2018. Wow. I think they imported something like 170 tons in a small, maybe a month or so. And basically the last time they imported that size was back when spot gold dipped to 1,300 an ounce in like early 2018, in the spring of 2018. So the East is buying the dip, and Western ETF holders may be selling because it's not performing, this or that. And what you may see right now is a lot of ETF bullion moving from the West to the East, and that may be what that Comex graph is showing us. But it's doing it at a rate we've never seen before. And so, yeah, these are unprecedented times. It's you don't want to sit there and sound like a maniac and sound like, this is historic and never been done. But the data just says it. I don't need to be shouting and pounding the table. The data is unprecedented.
Another milestone that has been reached recently is Comex registered silver has fallen today. Today is Friday as we record this. Below 50 million ounces for the first time in quite a long time. Once again, Michael, he's on Twitter. He's Michael Say 98. He is the guy who comes up with this data. Very interesting. Is this historical?
Yeah. So for a while now, there's been a huge outflow of silver coming out of Comex registered pile. And for people that don't understand the difference between registered and eligible, the registered is basically the pile of Comex silver that fractionally backs it, that's actually available for delivery, that's up for potential exchange. Whereas the eligible pile is just metal that's sitting in warehouses that's not up for exchange at the moment. And that could change. Eligible could go to registered if spot prices say went higher and investors wanted to cash in. But at the moment, all we see is silver coming out of the registered pile, which is really important because as soon as you have a difficulty getting 1,000 ounce silver bars from the Comex warehouses, that's going to be a real pinch in terms of spot price. Eventually, you'll have various buyers having to go out in the market, and the spot price would get up quickly. So yeah, below 50 million ounces is crazy because when you look at the long-term chart of registered silver and Comex, we had this huge influx of silver that came in during the early 2020 COVID. Comex futures silver was much higher than the OTC spot price in London. And so you had this massive amount of silver that inflowed from London to Comex in order to take advantage of the arbitrage. You had, it was like 150 million ounces, just over, of registered Comex silver at the peak in early 2021. But the Reddit Wall Street Silversqueeze came about. And ever since then, we've seen nothing but, silver outflows. You can see 100 million ounces have flown out of, Comex registered silver piles in about a year and a half.
Well, okay, just to let's back this up and let me describe what we have here. This is going back 20 years. The Comex registered silver. This is available for taking delivery, and it's spiked way up high. What was this peak? Was this during this was COVID, March of 2020, this time frame?
Yeah, that's where the inflow started happening, because there's a massive difference between Comex silver futures and the OTC spot price. And so a lot of silver came over from London to cash in on that difference.
So now we're below here 50. And even going back 20 years, 50 million is, I mean, the trend is pretty sharp. We've never seen such a sharp trend of this much dropping. But at the same time, while this spiked up because silver was flowing from London to the Comex warehouses, as it's gone down, it's not going back to London. Their volume, their amounts in the vaults are dropping also.
Right.
So where is it going to?
I highlighted that this week, and I consistently highlight the London, the supposedly transparent amount of silver that's held in London, which I think is around 900, I believe it's 900 million ounces, but I would say 70% of that is unsecured ETF silver holdings. So there's only a float of roughly 300 million ounces of silver, float. We don't know exactly who's the owner of that. But 300 million ounces, to put that in perspective, is more or less what India this year is going to demand in terms of silver bullion imports. So they're on pace roughly for 263 million ounces for this year, and that's a fourth of world silver supply, just to one country alone. And so that's the other half of this. The West may be selling off ETFs because they're not performing well spot price wise, but the physical market in the East is sucking it all up. You have China sucking up massive amounts of gold. Obviously, they consistently buy silver to put into their manufacturing base, but most of the silver investment demand in the East is coming into India. And it's really, it's a question of young Indians looking at the silver versus the gold trade, and they're buying silver jewelry over gold jewelry more often than not nowadays, because gold jewelry is, exorbitantly more expensive. Younger generation doesn't want to tie up all their capital in gold jewelry dowries. They'd rather have just silver jewelry to show off with and put the rest of their funds into other investment classes. And so you have a sea change, more or less, where the poor men and poor women, supposedly, of India are preferring silver over gold. And I don't foresee that changing, especially if spot prices stay at these relative levels. I mean, the rupee spot price for silver is like 1,400, and I mean, it has been up to 2,300. So it's sold off a lot. And if you look at the long-term chart, it's a huge cup and handle. And I said in the video this week, I would not be surprised if we came back in 2 years' time and the rupee silver price was twice what it is today. So I think Indian buyers who are buying silver bullion with, a short, medium to a long-term basis are going to be rewarded handsomely for doing so.
Right.
So James, we're Wall Street Silver, and of course we're all whining on, some people are celebrating because silver is so cheap and I can buy more. And other people are like, all right, well, when's it going to go up? And what do you think the trigger is? What makes it happen? What should we be waiting for?
So, we've had a lot of relative fiat US dollar strength, and it's this weird thing that you have to kind of keep in your mind. There's two things going on at once. You have high inflation, virtually everywhere in every fiat currency in the world. And the US dollar's inflation is probably in the low teens at the moment. And, in the last few weeks, we've seen a lot of US dollar commodity prices sell off. And so there's been a lot of relative strength in the US dollar lately, not just in gold and silver spot price sell-offs, but in oil and various other energies and commodities. And so this is a little bit of a respite, I think. I mean, the Federal Reserve was pretty hawkish in their Jackson Hole, in the 8-minute speech that Jerome Powell gave at Jackson Hole. He basically said, we're going to continue to fight inflation and we're going to keep raising rates. And so the federal funds rate is at 2.33. Inflation's probably at the low teens. So there's a huge gap between what you can actually get for your savings versus what the inflation is. And I think they're playing, ultimately, it's a matter of time before something breaks in the market and they're going to have to reverse course and change policy and go to a dovish stance, and the dollar will start selling off and we'll roll over and have a relatively weak dollar for years and years to come. And in that scenario, that's uber bullish for spot prices in silver and gold, not merely in the US dollar, but also just globally in general. So, if you look at the gold price in terms of how it's performed thus far this year, it's only really negative in US dollar terms. If you look at all the other major fiat currencies, it's still in a positive. In the euro, it's still positive in the yen, in the pound, et cetera, et cetera. So anyone who's out there long-term bullish bullion, hopefully you don't have a time spectrum that's like, it has to happen tomorrow. Sorry, that this thing's a multi-decade bet. And you're dealing with the Titanic of a financial system, globally, and a lot of political power that's fighting against it. And so you have to have a longer term perspective if you're going to keep your mind right. So that's why I typically, I bet on bullion, because bullion's the one that doesn't have the time, cost. It's not like an options bet or, the idea that this is going to happen tomorrow. I think this is going to play out throughout this decade and next. So we're going to have a longer term time horizon for most people if they're going to stick it out.
The Fed's talking tough. If you look at Jerome Powell's speech after Jackson Hole, people who just listened to that speech, they'd say, "Oh, he's tough. He's the next Paul Volcker. He's raising rates and he'll do whatever it takes to stop inflation." But a lot of us other people, we just interviewed Mark Faber, and he was like, "No, there's just no way they're going to do that." Or what was it Mark said? He said, if once rich people start losing money, that's when things are going to change, because the Fed won't be able to hold up to that kind of pressure. Right now, they've only lost a little bit of money. They've given back a year's worth of gains. But when they start giving back more than that, that's when people start making, when Nancy and Paul Pelosi start losing real money,
that's when they pivot.
That's when the Fed's going to pivot. What do you think?
No, I think that's a good point. It's really always been, for me, in terms of this mania for bullion to come, is really when the confidence starts to really fail in the high net worth category of investors. And when they start moving into commodities, and when they start moving into precious metals and precious metals related, and we're not even there. We barely touch the surface in terms of people moving into maybe oil and related energy stocks, but nothing's really moved into precious metals in terms of Western fund flows. And that is ultimately what's going to drive this into a mania. It's the Western fund flows that are going to come screaming in because they have a lack of confidence in the store of value underlying. I mean, this year to date, S&P is down 16%. The Bloomberg bond market index is down negative 10%. These are all, the Bloomberg bond market being down 10% it's never, I think it's the lowest it's ever been on record. So, these are both major asset classes that are down. And so, silver's obviously down in the year, mid 20s, I think, in percentage terms. But it's not, virtually everything's down. There's only a few things that are up. And so it's one of those things where you have to have a longer term time horizon and don't sit there and hope that this happens tomorrow, and understand that first and foremost, it's about preserving your purchasing power, and secondly, potentially enhancing it. And I do think that ultimately we're playing with fire, and that the confidence in the store of values that we use, these fiat currencies that we use, is going to really fade and increasingly as the decade comes. And so you just have to wait that out.
With the Fed, what do you think might be that trigger that pushes them, though? Would it be like unemployment rising, starting to tick upwards, and it just becoming obvious? Do we need them to actually admit there's a recession, like a third quarter of negative growth?
Yeah.
What's the trigger where you think the Fed just can't handle the pressure anymore and has to change course, even if inflation stays high?
It's probably a combination of what you said, the third quarter recession being undeniable, and then as well, there being major volatility down in the stock market. If you get the stock market rolling over S&P toward 3,500 or 3,000, they're going to kick in and they're going to be dovish and do what they can to save, the baby boomers who are, over levered in stocks. They have to make sure that segment of the population stays, thinking that they're wealthy. You know, they don't want them thinking that they're poor, because that's going to really hurt the economy if baby boomers aren't spending like they should. And so it's this juggling act that they have to do. And all the time they have to keep people still believing in the strong fiat US dollar as being, you know, the store of value that you should stay in. And, you know, and any time there's a major fiat currency collapse, a lot of times what you want to do is get as many people into the boat as possible, so the haircut isn't as painful for, you know, the haircut can be given to as many people as possible, so it's not as painful. So my expectation is, yeah, we could have the fiat dollar go stronger for the rest of the year and even into the next. Possibly the fiat Federal Reserve keeps raising rates and we go into a situation where the dollar gets stronger and stronger, and the milkshake man looks like he knows exactly what he's talking about, and he's proven correct. But ultimately, you'd ask him and he would agree, like anybody who knows how the system works, the fiat US dollar is second above gold. And ultimately, that's where people are going to go at the end of this, is they're going back to bullion.
Yeah. You know, speaking of the US dollar and the world in general, we're seeing more and more reports about different countries possibly switching their trade to other currencies. Saudi Arabia is planning to do some oil trades in yuan. More and more countries are doing trade settlement in their local currencies and not the US dollar. Is this, you know, what do you think? Is this a long-term trend, or just something that's going on right now because of Russia, Ukraine?
No, it's a real trend. I think the East doesn't want the United States to have as much political power as it does with the financial system. At the moment, they have a lot more say in price discovery power, but Russia is increasing its ability to, you know, to push its political agenda using commodities as a way to do so. But that, I think the increasing speed of change is really going to come from what the BIS is working on in terms of wholesale settlement between sovereign states and using CBDCs in doing so. And that's a huge topic that would probably take, you know, an hour or two to go over and explain how this could really change a combination of how nations store their savings. They're more and more they're storing it in gold bullion over fiat currencies. And I think that trend doesn't stop. And then the other thing is the question of technology and payment settlement. Right. Not having to go through the US dollar as the middle interim currency, and just being able to trade directly using the BIS system that's coming. And those two things are going to change a lot in terms of the way the world looks 10 years from now. And so exactly when and how and all that stuff, these are all questions that we can speculate on, but that is coming. I mean, the BIS is working hand over fist. Augustin and crew have been working on that for years. And so it's not gonna be much longer, a matter of a few years, before we're going to see wholesale changes in how payment settled and the system functions in terms of financials.
You know, you do work at SD Bullion, so I have to ask you, what are the, you know, everyone's always complaining on Reddit how crazy the premiums are right now for American Silver Eagles. What has the best premium right now? What's the most reasonable premium out there that people should be considering at this time?
I would say it's kilo bars, 100-ounce bars, 1-ounce private rounds, and then the lowest premium sovereign silver coins. If you want to have a government issued guaranteed silver coin, stick with something like the Royal Canadian Mints, South African Krugerrand, the Australian Mint. Those are coins that are all reasonably priced when you look at compared to the dysfunctional U.S. mint system. So yeah, I would say, generic premium 100-ounce, kilo, and 1-ounce rounds. That's probably where you'd start, and then get some sovereign silver coins as well if you want guaranteed government silver coins.
Now, why is the American Silver Eagles have such a crazy premium? Are they just not producing what they could, or they've reduced? What's the big
combination of factors? The U.S. Mint operates similar to the way that the U.S. bond market works. There's only so many guaranteed buyers that are allowed to make a market in that. And so, you have your authorized purchasers, and that's it. And, in the way that they act, they only get so many in allocation, and they need to make a certain amount of profit on that allocation. And when they get a small allocation, they jack up the price in order to make up for what they lost in volume.
So the Mint's just not making enough of the coin.
Yeah.
I read that they're making like half of what they could make.
Yeah, the mint, I think, has made 12 million ounces or just a little bit more of silver eagles. And, during the 2011, 2010, 2013 years, they were making 40 million ounces per year.
Wow.
And so, and that is the leader of how premiums work and how, the silver bullion demand physically is kind of set in price. And so when the silver eagle market explodes in premiums, virtually everything follows. I mean, even now, 90% silver is at ridiculously historically high silver premiums as well. And that's a combination of people trust that silver, that 90% silver, and they're not making any more of it. It's all going into hiding. So those two, that 1-2 punch of the silver eagle and the 90% silver coins, watch those two premiums. If they stay high, everything else is going to stay high. That's just generally how it goes.
Yeah. Well, James, we love having you on, man. You're a wealth of knowledge about both the physical market and what's going on in the world. And we're definitely going to call you back.
All right, guys. Thanks so much for having me on.